Hey everyone, Trevor here with the Trev and Jess team of Love It Properties, joining you from my new home office space, which is kind of cool, showing it off a little bit. Today I wanted to discuss an extremely common topic I've been having conversations with both buyers and sellers about a lot this year. What is a real estate market shift and how does it affect you? 2023 has so far been a very turbulent time in our market. In this episode, I want to break down quickly what happens when the market shifts. And I want to spend some time dissecting exactly what type of shift we're experiencing right now. If you're thinking about transacting soon, this will be a super helpful episode to understand what kind of market are you stepping into. So let's jump in. A real estate market shift refers to a significant change of the conditions in a particular real estate market. These shifts can impact supply, demand, and property prices. Here are the most common types of shifts we've seen in the past. The first type of shift is a buyer's market. This occurs when there are more properties available than buyers in the market, leading to lower prices and favorable terms for buyers. Think 2008 market shift, where house prices plummeted because supply was really high and buyers were so few. The second common type of shift is a seller's market. This happens when there are more buyers than there are properties available. This leads to higher prices and more advantageous conditions for sellers. This has been the trend for the past 5 to 10 years, where house prices steadily rise as demand increases. The third type of market shift is called a balanced market. This occurs when supply and demand are relatively equal, resulting in stable housing prices and balanced negotiations. We've really only seen glimpses of this, and it tends to be the transition between the two other types. Market shifts can be influenced by various factors. These can include economic conditions, interest rates, local governing policies, and demographics. Real estate professionals closely monitor these shifts in order to make informed decisions for their buyer, seller, and investor clients. Now, what type of shift are we experiencing right now? Honestly, it's none of the above. We clearly have a supply shortage, which should mean it's a seller's market, and by any strict definition, it still is. However, high interest rates are creating a really low buyer interest as well. We're in a pretty rare situation that I think is poised for a more dramatic shift in the future. That means right now there could be a unique window for buyers and a unique challenge for sellers in our market. For buyers, you're much less likely to overpay in this market, but get a fair price for what you're actually paying for. You could potentially even snag a property right now for below market value. Because mortgage rates are higher than they typically are, there just aren't that many buyers out there competing for homes. This is resulting in really great listings having to drop their price or negotiate with a single buyer exclusively. Historically, this balancing of the market for buyers right now is normal, but in the recent years that we've just went through, it's been anything but normal. If you'd wanted to buy in the market we just had, where interest rates were around 3%, then buckle up. You're going to be against a lot of competition, and you're going to have to put a ton of risk out there in order to even get a property. In this market, you get to pay what something is actually worth, and you don't have to put an exorbitant amount of risk out there in order to snag a great home. Plus, and this is my favorite part, with economic data showing really strong health and low unemployment rates, this means that when rates shift downwards in the future, the value you purchase at right now will be secure because more buyers will jump into the game. That also means the potential of growing equity quickly when rates come down again is really good. It's very hard to time the market perfectly as a buyer. Although it's expensive to get a mortgage loan right now, it may pay to be ahead of the future market shift in which interest rates come down. Then you can refinance and plus you'll gain a ton of equity. To put it into quick numbers, let's say you buy a $450,000 home today, you get a 7.25% interest rate and you put 10% down. That's approximately $3,250 a month. However, let's say the rates swing to 4.5% and your value jumps up by $50,000 over the course of 2 years. Now your payment is $2,350 a month. That's a $900 difference. That's both because of the drop in interest and also because of the equity gain that helps you drop your PMI. So you pay out more for the interest rate over the next year or so, but you're positioned well for the gain coming, which means you're going to be able to lower your payments and gain equity quickly. This puts you well in the green to the tune of $30,000 to $40,000. You could just wait until interest rates come down, but then you'd be paying $50,000 more for the same house. So it's really not a bad time to be thinking of buying. For sellers, there's still a real opportunity here to hit one of the highest values on record. The amazing thing is, even with the increase of interest rates, the values have stayed high. And of course, that has a lot to do with supply and demand. If the supply were higher, house prices would suffer, but it's not. We have a very low inventory and there's still a significant demand from buyers across our market. The one thing I would seriously caution against is the mentality that I can just list it in its current condition and get top dollar. This flipped really quickly this spring in our market, and I'm hearing a consistent theme among all of the buyers out there. They're saying, why would I pay that much in interest when the home is not perfect? The thought process goes, I can't afford that high of a monthly amount if I still have to do updates. So the quick advice is don't skimp on the updates. Do the carpet, the paint, the countertops, and the flooring that will make buyers want your listing really bad. It's not as simple as just throwing it out there anymore. Even if the data says your home is worth a certain amount, that doesn't mean that's where it's going to sell in this market. You need to entice buyers to pay the amount that it's worth. We're still seeing a ton of competition in the sub $350,000 range in our market right now. And I don't think that's going to go away anytime soon. But the market across the board is slower than it has been. So planning accordingly for whatever your next move is extremely important right now. Having contingency plans like renting your current place or being able to pull an equity line in order to purchase the new home might be necessary. Trust your realtor to help you deal with the shift and be able to angle yourself accordingly to get your home sold quickly. Well, that's it for today. Hopefully that was helpful in untangling what a market shift is and exactly where we're at right now in our market. If you have any additional questions or would like to see some new content that I haven't covered yet, please drop those down in the comments below. Thanks again, guys. We'll see you in the next video.